Good morning, guys. Good morning. CPI day. CPI day today. Hold on, I'm getting things ready here. So let's see what we had for CPI. Obviously bullish. I would have loved to see it take out this little area here before looking for a potential short. However, the fact that CPI did not pump as much as to take it and then drop makes me think that right now we're just rebalancing some of the imbalance that took place here, and then we're gonna continue to move higher. Reason I'm saying this is because looking on the daily chart, we took out yesterday's low. You can see that in here. So we took out yesterday's low, and also there is this beautiful bearish fair value gap here that hasn't been capped, and we have also relatively equal lows here above yesterday's high and previous day, like before yesterday. So oh. So let's see, what would I like to see? What would I like to see? So honestly, what I'd love to see, what I'd like to see is price just invalidate this bearish FVG here. If it does that, I'm going long. And I'm actually not gonna wait for any further confirmation of that. Okay, we'll just see how this thing goes. Okay, we have Ninja Trader here. So took the long. Stop loss is a bit higher than I would have liked. But we'll see. Now, as for potential targets, I'm looking at this area over here, and I'm also looking at, so for Forex, I'd say around 12-minute open, London kill zone high, 41.20, and then possibly the equal highs that we have here at the high of the Asia session. So as potential targets, this is what I'm looking for. So yeah, let's see. Also, it's going to be very interesting and very important, okay? Very important to see how price will react on this minor SMT sell side liquidity over here, because I wouldn't want to see any sort of rejection from there. Did I say sell side? No, I meant buy side. So yeah. So I just want to make sure that price will start pick up on momentum once it does that, once it goes above there. Okay, moving stop loss to break even. £100 so far. Okay, I took partial 2/3 of my trade, and let's see if we can let it run for more. Nice. Now I won't be able to take any more partials out of this, but if it happens to, you know, give me like $200 of profit on this one mini, I'm gonna take that as well. Okay, 190. Come on. Beautiful. Okay, wow, that was fast. That was really fast. Really fast. So I didn't really wait for price to create an overlapping VC or anything like that on top of the on top of the bearish FVG here, 837. I just entered once price was picking up on bullish momentum on the 902 candle with the expectation that it's most likely going to pick up on more bullish momentum, and then it's going to continue to push higher, which is exactly what it did. I would say that biggest reason that made me look for long and take this long is the mini SMT divergence that we had here, because it was also sequential SMT, almost, not really. Yeah, almost, but still, it was right at the border of the 90-minute Q2 and 90-minute Q3, like the middle pink and green rectangles at the bottom here, and also Q4 and Q1 micro quarters. That was really fast, you guys. Really fast. Probably, yeah, it just keeps on moving higher. And oh my God. There's also, hold on, let me show you. Yeah, it's probably gonna come here. Relatively equal highs here at Asia session high. But like I said before that, I would really love to see the reaction that it's gonna have at this next buy side area, SMT buy side area, which is right here around 12-minute open. The reaction that it had over here was quite okay, as in you can really see like a huge willingness of breaking above that level, because you can really see like a very clear FVG overlapping there. So that's an indication usually that the buy side liquidity found above that area that is just breaking higher, it's used as fuel, so that price can go higher faster. So next area is right here. What about stop loss? Well, stop loss, Simona, stop loss was just under this area here, okay? This SMT divergence. Because you can't really put your stop, like once you take an entry based on an SMT divergence, the safest place to put your stop loss is always going to be under the SMT divergence. And think about it like this. Why would that be? Because you have to think in terms of liquidity, right? So think about it like this. If price on gold creates higher lows, okay, a higher low, but price on silver created a lower low, then it means that the one that it's sweeping liquidity is silver in this case, okay? So it means that gold in here, when it creates a higher low, it's showing you a sign of strength. So then think about it like this. Why would that area of strength be broken to the downside? Because it would mean that it's not posting strength anymore. So obviously that's where your invalidation level is, So always think in terms of liquidity and also strength versus weakness, okay? And I've heard a lot of people say, when I started trading SMT. They were saying trade, like buy the stronger pair, sell the weaker pair, okay? Higher lows, it's usually a sign of strength. And when you pair that with seeing the CPI, which is very bullish, and then no actual reason for which price would have created this bearish fair value gap here on the 1 minute on gold, because why would it create a bearish FVG if the news did not take out SMT buy side, right? So then it means that that bearish FVG is it's nonsense, you know, because liquidity is the factor that makes imbalances being created, right? A fair value gap is an imbalance. A bearish FVG is a bearish imbalance, which means that price is sweeping buy side, and then it's using that to pair it with smart money short orders. Those smart money are selling, therefore they're creating an imbalance between the absorbed buys and the incoming sells that are flooding the market from the smart money, right? But then if no buy side was absorbed, then it doesn't make sense that this bearish FVG is created. So then just to make sure that this entire logic is correct, you just need for that FVG to be invalidated, okay? Of course, there is also the option in which the FVG would, you know, still hold. It would still, you know, resist price, and price would then go lower, but then you wouldn't see it being invalidated, okay? You would see that area be very sensitive, and price would be enough to just poke it, and then it would start to move in the opposite direction. But it was not the case in here. And that's why the stop loss there, because once that area would get invalidated, it just invalidates the idea that gold is strong. And so if gold isn't strong anymore, you know, then it's like game over. You don't want to be in a long trade. So that's what invalidates the trade. I hope it makes sense. Okay, so it seems that this is also an area of SMT buy side over here. So even better, because it's even a bigger chance for price to be attracted to that area. So for whoever still has a runner, that's really great. Whoever's holding longs, whoever's holding longs, pay attention to what's this? This is Asia kill zone, Asia session, okay? 5 minute, 8:05 p.m. New York time, bullish FVG, which was inverted, and that was the bearish unicorn on the Asia session. And also pay attention to possible reaction as a rejection on the 9:35 bearish FVG, again on the 5 minute. So if you guys are holding any runners on this long trade here, make sure you're going to secure something no matter what, and pay attention to any possible reaction from there. Because if we are in a bearish trend, if we had a bearish shift from a higher time frame perspective, obviously, which it pretty much seems that way. So if that is the case, then we shouldn't really see price breaking any more daily highs, because it means that it would break structure to the upside. Okay, so we might see price today inducing a lot of buying with CPI and with the current move to the upside. That could just have the purpose of sweeping whatever buy side is going on here, and then just tap Asia session unicorn short, and then continue to move lower. So just pay attention to that. You can already see that price is already sort of taking it slowly already with the move higher once it reached into this area of SMT buy side. Doesn't mean that it's going to start to move down right now or anything like that, but just pay attention to any sort of reaction, any sort of bearish reaction. And when I say this, I'm referring at bullish FVGs being inverted. I'm referring at bearish shift in market structure, like minor shift in market structure. I'm referring at potentially bearish FVGs being formed. So pay attention. If you're in long all the time, you have to make sure that the price action, the way candles are forming, are continuing to show you a willingness of creating and supporting a bullish order flow, right? And as you know, bullish order flow is always going to be formed of bullish FVGs and bullish order blocks, okay? Also, any bullish order flow will always have also pullback. So if this is your bullish order flow and then it starts to pull back, right? What you want to pay attention is that if there are any bearish PD arrays that are forming, like for example, a bearish FVG, you want to see price at some point invalidating that. Okay, so it means that the bearish order flow starts to trump the bullish order flow. No, vice versa. The bullish order flow does not allow the bearish order flow to, take control, or I don't know, whatever you want to call it. Let's see, someone has a question here in the chat. I find SMT everywhere. Which one is valid before entry? Can you explain? Yes, of course. Of course I can. So the best SMTs are going to be the ones that you can match or overlap or make sense of as an SMT forming in between two quarters from trader days quarter theory. And also, for example, if you're going to look at one pair sweeping yesterday's low and the other pair not sweeping yesterday's low, for example. So any SMT that is going to form, like for example, like we had this one over here, okay? We had these two lows. So this low, the first low, was created during the Q2, the 90-minute cycle, second quarter, which is at the bottom of my chart here. You can see that there are some drawings, some rectangles, okay? Some lines that are colored. The bottom one is green, and then there comes like a middle section with some rectangles drawn in here, and you can see the bigger pink one, right? And then after that comes a green one. So the pink one is Q2, and that's in the 90-minute quarter cycle, which starts at 7:30 New York, ends at 9 a.m. Okay, and then the other one starts at 9 and it's going to end at 10:30 New York, so in 1 hour from now. So you got to think about it like this. Every SMT is going to be more powerful if you can make it match, for example, in between two swing lows that are, one of them is the lowest low of a quarter, and then the other one is a low that creates in another quarter, in the next quarter, right? So for example, the micro SMT that we had here, what made it valid was the fact that this swing low, first of all, it's a 1 minute SMT, okay? Because if I'll go to the 5 minute, I will not see swing lows over here. Its chart will not post any swing lows. So I won't have an SMT divergence on the 5 minute, okay? So it means that if I'm looking at an SMT on the 1 minute, it means that I need to be able to rely on the quarters that are forming, that are 22 minutes quarters, okay? If you don't know what I'm talking about, you have to look it up on Google, on YouTube. It's called day quarters or quarterly theory, okay? He has one single video. Don't look at any other videos that people have created explaining his theory. Just look at his video. You can't miss it. It's only one, okay? So look that up. Then use the free indicator that we all use on TradingView, which is the one that you see here in my charts as well. And that will help you divide your chart into yearly, quarters, whatever you want, right? You don't have to use all of them, but there is a setting and indicator that allows you to use, like, for example, daily quarters, 6 hour quarters, like, yeah, these are basically the daily quarters, then the 90-minute quarters, and then the micro quarters. Micro quarters are slices of time that are 22 and 22.5 minutes each. Obviously, they start and end at specific hours. So the indicator is going to help you with that. So you can see here at the bottom, okay, you can see this little blue rectangle, which started at 8:38 and then ended at 9. And then there's the next rectangle is gray, started at 9 and then it ended at 9:23. Okay, so that's 22 to 23 minutes each. So those are the micro quarters. So whenever you're looking at a 1 minute SMT, then you got to make sense of it in the light of the micro quarters. Okay, so for example, this low over here was the lowest low that was created in between 8:38 and 9. Okay, now this low came higher on silver, however, on gold. However, this low, the same low at the same hour, so matching the hour is critical, came in lower on silver. Okay, so matching the SMT divergences with a quarter, it's gonna ease everything for you. Also, you should not trade an SMT unless there is a fair value gap involved. Because I've said this many, many times, and I've explained this so many times. You either have the situation in which you have an existing an existing fair value gap, and then price will create the SMT as a rejection from that FVG, which means that you're looking at a higher low, and the other pair creates a lower low, okay? Or you're looking at it in the opposite way. You have a low, price takes that out, creates a lower low, but then immediately creates a bullish fair value gap, okay? Wait, good, I didn't do this. Okay, so you have a low, and then price takes that out, so it creates a lower low, but then it starts to move up and creates a bullish FVG. So that's an indication for you that despite price creating a lower low, which is a sign of weakness, it's actually using the sell side that it found under that low to pair it with smart money long orders, because otherwise you wouldn't see price creating a bullish FVG. And so this pair will create a lower low, but then, so you have the, the lower low and then the bullish FVG, but then your other correlated pair is going to create a higher low. Okay, so you first have the SMT, you don't do anything, and then you wait for price to create a bullish FVG, and that bullish FVG is going to validate the SMT for you. It's going to validate the fact that price just swept that low, and right now it's ready to move higher. Okay, so no trade. SMT is more valid, just to summarize, SMT is more valid when you can make sense of it in the light of using days quarterly theory. You can use, like, the best way to use the quarters is on the 1 minute, trade the micro quarters, so the 22-23 minute long quarters. Then on the 5 minute, you can trade the 90-minute cycles. And then on the 15 minutes and 30 minutes, you can trade the 6-hour cycles, the daily quarters. And also, if there is an SMT, but it's not confirmed by a FVG, you don't trade. Also, if you have a fair value gap that price seems to be rejecting from, but you do not have an SMT forming, so then it's not valid, or it could be valid, but then it's lesser probability, low probability. Okay, that's the logic. That's the logic that I use, and yeah, no more end. FVG is like king confirmation. Yeah, I guess you could call it like that. King confirmation if you want. Okay, so it's 9:39. We already had 9:30 open, right? But as you can see, there is no fair value gap forming, so we don't have a first presented FVG. Therefore, we're not doing anything yet. Sort of like keeping it in a kind of neutral bias at the current moment. We'll see if we can get a rejection from here, and possibly because we might have a first presented FVG forming here 940 as a SIBI, and we'll see whether we can get an invalidation of that for a continuation higher. Okay, so we have a tap of this BC. That's what that is. 906. Bullish FVG. We'll see if price wants to pick up on bullish momentum now and start to move higher. The thing that makes that BC important and relevant is the fact that it's basically just the imbalance that was created once price broke above this SMT area, minor SMT area. So this is our first presented FVG. We'll see whether price can actually turn that into an inversion. Also sort of like looking at 907 here, which this could look as a unicorn short, but I wouldn't really say, because you see it was rebalanced and then price did create did go higher, created a higher high. However, if you look at this whole move here, it's a single bullish leg. It's not like price created this move and then it had a pullback into the BISI and then it moved higher. Besides this, the reaction, the way it left from that BISI and it started to move higher, like it's not really that mind-blowing as in wow, super bullish move, and right now this is invalidated because it's broken in the opposite direction, you know, so not really. That's why I wouldn't necessarily say that 907 could act as a possible unicorn short. I mean, honestly, at this point, I don't see any fair value gap on this whole move here that could act as a unicorn short. Again, what I want is this bearish FVG, this first presented FVG, to be invalidated, and that would just confirm a continuation move higher. You know, one price starting to reject, moving lower under 50% of this bullish leg, I don't want that. If it ought to continue to move higher, that should not happen. It's also like we're like any minute now, any moment now, 15 seconds until we're gonna be inside the 950 to 1010 macro. So it would be really cool if price would bless us with the continuation move higher. Honestly, that would be great. Okay, we seem to be picking up on bullish momentum, but I don't know, I still want to kind of wait for the CPI here to be invalidated. I don't just want to go long just because price is creating bullish candles. You know, by the looks of it, I might actually miss this entry because I'm not sure that price will just play it in a fair way, you know, to give me a shot to enter, as in bullish candle, you know, sort of like bullish candle, bullish candle, bullish candle, BST overlapping this first presented FVG, move into the BST and then rejection. Yeah, because if it's picking up on momentum, that it could actually just move, and that's it, move up. I don't know if we're gonna have any other high impact news for today. Right now at 10. Let me check that. Yeah, something. New home sales, Michigan consumer sentiment. Okay, so we are expecting again in like less than 2 minutes. Oh, less than a minute. Some red folder news. We'll see what it's gonna do. See, the price action is basically just not telling us anything right now. There's no point to jump in a trade so that you can get stuck for minutes and minutes in no man's land. Now here's something interesting that's going on silver. So we have this 940 bearish FVG here on the 5 minutes, and gold seems to be respecting it. However, silver seems to be inverting it. We'll see what happens. Someone's saying they're in a short sell, will close if market trades and closes above first presented FVG. Yeah, you should. If the first presented FVG is invalidated, yeah, it's likely gonna continue to push higher. Well, my trading view just froze. I don't understand why. Buddy, come on. Oh my God. Dear Lord. Okay. Okay, just entered long. There you go. We'll see how it goes. Not too much of a long. You know, I should have probably waited for a tap inside the BISI here that was created on 10:06. We'll see if this will hold price above it. I would honestly not want that BISI. Not to be invalidated, but definitely I wouldn't want it to be invalidated. But I would, even more than that, I wouldn't want it to be tapped. Like, I would like that to be a breakaway gap, a bag of money. Breakaway gap, BAG. Okay, gonna move my stop just under. No, I'm actually gonna keep my stop loss at the mid of this bullish order block here. 1002 plus OB here. So let me try to replicate somehow what I just did here. $2R would be around here. We'll see if we can ride it all the way up till there. I would love to. Once we create a new higher high, I'm gonna move my stop to break even. So once we break above this high, especially if I'm gonna see it catch up on bullish momentum, then I'm definitely gonna move my stop loss to break even. Okay, so that's about now. Okay, stops at break even. We want to see continuing pushing higher. It should not make any sort of pullback under this high right now. If it does that, then it's not okay. So as you guys can see, it's just going to reach inside that 5-minute area, the bearish unicorn that I was telling you about a little earlier. It's going to reach there right about now. So I'm going to take this $120 in, I don't know, 5 minutes with minimum risk that I could have ever taken. And that's about it. Your PC restarted. What a time. Oh my God. Oh my God. All right, you guys, I'm gonna call it a day. It's Friday, Freaky Friday, beautiful Friday. It was good. Price, the gods of the markets have been very, very good to us today. So yeah, thank you again for being here with me. Don't forget that Monday is not gonna be a live stream. So I'll talk to you guys on Tuesday, and until then, just take care, have a beautiful weekend, and just